Do you know the story of Ray Kroc? He's the guy who took McDonald's, which was started by a couple of brothers, and he really made it a worldwide franchise. He grew it in a huge way to a global empire where all over the world people know about McDonald's. And one time he was giving a lecture to a group of MBA students, getting their master's degree, and he asked them, what business am I in? And they kind of laughed, and they said, well, you sell hamburgers. No. Well, fast food. No. Well, marketing. No. He said, no, I'm in the real estate business. And they were probably kind of surprised by that, but really the way McDonald's makes their money is through real estate. In a way, they sell burgers and fries to pay the rent, and they own so much of the real estate of the various McDonald's franchises. The wealth, the billions of dollars, came from owning the land on the best street corners in America. And here's the truth about the American dream. You can get rich by working hard. You can get rich by inventing something. But if you want to get wealthy and stay wealthy, eventually you really need to own dirt. You need to own land. That's how so many millionaires and billionaires have made their money, is through real estate. My name is Dr. Nathan Crockett. I own 19 companies and nearly 50 pieces of real estate, both commercial and residential properties. And I'm not asking you here to start a burger chain. I'm telling you that real estate is a unique asset class that does things for your wallet that stocks and bonds and crypto simply can't do. Now, I invest my money typically in 3 buckets. I buy businesses. I started several businesses, but I've bought many others. I buy stocks, particularly dividend stocks, and I own some crypto. And then I've put a lot of my money into buying real estate. And I want to tell you 9 reasons why you need to own real estate and how it acts as a wealth accelerant for your portfolio. So reason number 1, the magic of leverage, and that's sometimes we call it OPM, other people's money. Reason number 1 is the closest thing to magic in finance. If you want to buy $100,000 of Apple stock, you need $100,000. But if you want to buy a $100,000 rental property, you probably only need $20,000. Why? Because the bank gives you the rest. That allows you to control a massive asset with a small amount of money. If that house goes up in value by 5%, you didn't make a 5% return because you invested only $20,000. So you made a 25% return because of OPM, other people's money. Now, for me personally, I'm cautious. So historically, I've paid cash for all of my real estate with the exception of one warehouse that I financed. So in the past few years, I've really been looking at the math and realizing the beauty of leverage and considering taking out a loan for certain things, even though I'd have the cash to pay for it. Reason number 2 is it's like an invisible savings account, right? The principal pay down. So you pay the principal, and when you take out a mortgage, you have to pay it back every month, right? But if you have a rental property, you're not the one paying back the mortgage, the tenant is. So every month you should be getting a check from that tenant if they pay, and you're using that check to pay down the mortgage. You take the check, you pay the bank, the balance of your loan goes down. It's literally like an invisible savings account that someone else is depositing money into on your behalf because you're paying off the house without having to pay the money yourselves. You wake up 30 years later or 15 years later with a 15-year mortgage, the tenant moves out, it's totally paid off. You've paid off this house, now worth much more than you paid for it. They paid the mortgage, not you. 3rd reason, the tax eraser, depreciation. So rich people love this about real estate, and that's depreciation. It's a little bit complex, but if you stick with me, the IRS assumes that buildings fall apart over time, like a car. And to some degree, they do. You need a new roof and so on. So they let you take a tax deduction every year for wear and tear on the building, and it goes out over a certain amount of time. The kicker is that oftentimes the building isn't actually losing value because if that area is increasing in value, it might be going up. But on paper, the IRS says that you lost money. So that phantom loss helps you shield your rental income from taxes. And as someone who's paid millions and millions of dollars in taxes because of owning profitable companies, one of my favorite things about real estate is that depreciation, which often offsets the money I'm making in rent. 4th reason is cash flow. We sometimes call this mailbox money, right? It's sort of the bread and butter of rental properties. Stocks are great, but usually you only make money when you sell them with capital appreciation. An exception would be if you have stocks with great dividends, which I love and have talked about elsewhere on YouTube. But to sell a stock, if you sell all your Apple stock, you have to kill the goose to get the golden egg. But real estate pays you while you hold it. The goose keeps laying golden eggs. The goose is becoming more valuable, and you're able to sell the golden eggs. So particularly, if you did take out a mortgage on a residential rental property, after you pay the mortgage and insurance and taxes and repairs, maybe you get $300 or $400 that month to go back into your pocket. That's passive income. Now, that money eventually can replace your salary, and you can quit your normal job if you go all in on real estate. And that's like residential. For commercial, it's much, much better. I have tenants with my commercial properties like Ollie's or Tractor Supply Company or aerospace companies where I own the company, but I also own the warehouse that we rent. So with commercial real estate, I can net $10,000, $30,000, $50,000 a month with the right property. And part of that's because I'm not paying a mortgage. One of the benefits to having paid cash for the property, I could own a lot more properties, a couple hundred properties, if I'd taken out loans on them. But by paying cash, all that rental income that comes in, other than taxes and insurance and repairs, I get to pocket. Fifth reason is the inflation shield. So we all hate inflation. Gas costs more, milk costs more. But if you own real estate, inflation in some ways is your best friend. Why? Because when the price of milk goes up, so does the price of rent. So it's like a shield against inflation. And one nice thing, if you took out a loan, your 30-year fixed mortgage payment will stay the same. So every year or every couple of years, your rent is going up that you're collecting, but your biggest expense, your debt, stays flat. The gap between those gets wider and wider, making you richer and richer just by waiting. Sixth reason is forced appreciation. What I mean by this is control, right? Like you're the CEO. If you buy stock in Tesla, Elon Musk can do whatever he wants. He can send out a crazy tweet, the stock can drop. You can't do anything about it. You're a passenger. And some people like that. But in real estate, you're like the CEO. If the value is low, you can fix it. You can paint the walls. You can add a bathroom. You can put in granite countertops. We call that forced appreciation. You don't have to wait for the market to go up. You can force the value up with a hammer and some paint and some hard work, right? Seventh reason is scarcity. God isn't making more land, right? So, I mean, Mark Twain used to say, buy land, they aren't making any more of it. It's one of the reasons I like to buy just big chunks of land. It's basically supply and demand. The population is growing, especially where I live in South Carolina. It's one of the fastest growing, the Greenville area, one of the fastest growing areas in the U.S. People need a place to sleep. The amount of land on earth is fixed. When demand goes up, supply stays flat, prices go up. Owning real estate is owning a finite resource in a growing world. So that's the seventh reason. The eighth reason is you can borrow against it. I've never really done this, but from a refinancing collateral aspect, it's definitely an advantage of real estate. If you have $100,000 in gold bars buried in your yard, you can't buy groceries with it unless you sell it. But when it comes to real estate, if your house goes up in value, you could go to a bank and say, give me a loan against the equity that I have in my house. They'll give you a tax-free cash because the debt isn't income. You still get to keep the house. You can use that money to buy another house. And it's one of the ways that wealthy people snowball their net worth, typically without ever selling their assets, as they can often borrow against their real estate. Ninth reason, it's a hard asset. And, it's real. So again, I own a good amount of crypto, but crypto can disappear. Even stocks can go to zero if a company goes bankrupt. But a house, it's wood, it's concrete, it's land, a commercial shopping center. Even if the economy crashes, you could still live in it. You could rent it out. It has some level of utility. People don't want to live outside, 24/7. They need a roof over their heads. In a world of digital noise and paper assets, owning something you can touch or you can hunt on the land gives you a level of security that nothing else can match. So don't just play Monopoly. Play the game for real. Buy actual assets. It'd be like playing Monopoly and just trying to always pass go and just collect the money from passing go and never buying assets. That's what a lot of people do. They just go into work, make their money, and they never buy real estate. So I'm Dr. Nathan Crockett. Thanks for watching. If you find it helpful, maybe give it a thumbs up or subscribe or share it with someone else. Hope you have a wonderful, wonderful day walking with Jesus. And I'd encourage you to go buy some dirt, buy a house, buy some real estate. I think you'll be glad that you did.